Hello and welcome. I'm Pallavi Sharma and you're watching BIZWORLD Weekly, a show where we bring you the top stories of the week from across the world. Let's start with the market check. Indian equity indices ended on a negative note on November 21st. At close, Sensex was down 0.47% at 85,231.92 points, and Nifty was down 0.47% at 26,068.15 points. BSE mid-cap and small-cap indices shed 1.3% each. Except FMCG, all of the sectoral indices ended in red, with capital goods, realty, PSU Bank, and metal down 1% each. Maruti Suzuki, M&M, Interglobe Aviation, Tata Motors PV, and Max Healthcare were the major losers, and on Nifty, the major gainers were JSW Steel, Hindalco, Tata Steel, Bajaj Finance, and HCL Tech. Indian rupee ended at a fresh record low at 89.4 per dollar on November 21st. Gold prices for 24 karat gold was at 12,448 rupees per gram, while 22 karat gold was at 11,410 rupees per gram. The US stock market is in focus recently, first due to the AI bubble jitters. Now it has fallen again. On October 20, Wall Street was on a roller coaster. At the end, it erased nearly $2.7 trillion in value. This came despite Nvidia calmed the AI bubble jitters from the minds of investors by actually releasing better than expected earnings and guidance for the next quarter. This initially boosted the tech sector and the tech-heavy Nasdaq index. Nvidia's shares had surged 5% and other tech-heavy stocks also started rising. All was good, looked like the markets were actually coming back on track, and then the enthusiasm faded and caution gripped all over the markets. Later in the day, Nvidia's stock had reversed sharply, closing 3.2% lower. This decline also weighed on semiconductor stocks broadly, with corresponding pullbacks in technology names like Oracle and AMD. The swift erosion in confidence exposed the fragility beneath what was seen as an AI-driven rally. At the center of this fall was the mixed US jobs report for September. The report was supposed to be released early, but the US government shutdown had actually delayed key economic indicators, and the report, though, showed payroll additions above the expectations at 119,000 new jobs, suggesting resilience in the job market. So why did the markets fall then? Well, the unemployment rate, though, was also rising. It ticked above 4.4%, its highest levels in 4 years. So while the jobs were increasing, the unemployment rate was also rising. This mixed signal raised doubts about Federal Reserve's December interest rate decision. Many investors had hoped for clearer signals on whether the Fed would cut rates to support growth, but the data had actually created more confusion. As a result, the market's implied probability of a rate cut fell below 40%. Treasury yields also softened, with 10-year note yields dropping about 4.1% as fixed income markets were also digesting the economic data. The tech sell-off extended beyond Wall Street to crypto markets as well. Bitcoin fell 4.2% to about $86,337. This environment of uncertainty contributed to heightened volatility. The CBOE Volatility Index, a Wall Street's peer gauge, surged to its highest level since April, reflecting increased anxiety. Intraday swings were also dramatic, with Nasdaq seeing the most extreme move since earlier tariff-related turbulence in April. Semiconductor indices also plunged nearly 5%, underscoring the sell-off's focus on tech hardware closely tied to the AI enthusiasm. Defensive sectors such as consumer staples outperformed modestly, with Walmart posting strong quarterly sales driven by e-commerce growth, signaling continued consumer spending strength despite lingering inflation pressures. Looking ahead, the markets remain highly sensitive to forthcoming economic releases and Federal Reserve's communications on interest rates. The path of inflation, labor market trends, and fiscal policy will actually shape investor sentiment and market direction in the next few days. Trump has signed the bill requiring the Department of Justice to release the Epstein files in the next 30 days. This is a big development as MAGA itself was divided on this topic. The release of Epstein files might be a big blow for some of the most well-known people in the United States and elsewhere, and even for Donald Trump. But here's a catch. It might happen only if all the details are exposed, and that might not happen. Our next report tells you why.
Donald Trump has now put his signature on the Epstein Files Transparency Act, a law that compels his own Justice Department to open up its vault of records on Jeffrey Epstein within a tight 30-day deadline. The act sounds sweeping. It orders the release of all unclassified documents, emails, and investigative material tied to Epstein's criminal cases and his controversial death in a New York federal jail in 2019. And it demands that this trove be posted online in a searchable, downloadable format. At the same time, it requires an unredacted list to be sent to key congressional committees, naming every government official and politically exposed person who appears in those files. What is expected in that dump is not just the evidence used to prosecute Epstein and his partner Ghislaine Maxwell, but also internal Justice Department communications on why Epstein was treated the way he was, who approved plea deals, who chose not to charge associates, and what was discussed after his death behind the walls of the federal system. However, this is not a guarantee that the public will see everything. The same law that demands transparency also builds in important escape hatches. Officials can withhold or heavily redact anything they say would jeopardize an active federal investigation. And material can also be shielded on national security and foreign policy grounds. That language matters because Trump has just ordered his Attorney General Pam Bondi to open new investigations into Epstein's ties with leading Democrats, such as Bill Clinton, former Treasury Secretary Larry Summers, and donor Reid Hoffman. Supporters of the bill warn that such fresh probes could be used as a legal pretext to keep politically sensitive material under wraps while still claiming compliance with the act. Even before this law, Epstein's shadow had already fallen on a striking list of prominent figures. The documents and related court material include more than 1,500 references to Donald Trump himself, reflecting his past social ties with Epstein before the two publicly fell out. Although mere mention does not prove wrongdoing, Trump's sudden U-turn is itself a major part of the story. During the 2024 campaign, he loudly promised to release the Epstein files if he returned to the White House. But once back in office, his Justice Department declared that no further files would be released, and his team leaned on Republicans not to back legislation that would force their hand. That stance enraged some of his own conservative supporters and podcasters, who accused his administration of gaslighting and running a cover-up. In the end, Trump flipped, instructing Republicans to vote for the bill, and then presenting his signature as a move that would expose Democrats more than Republicans. Even as critics argue that the new active investigations he ordered could be used to keep the most damaging material out of public view.
Cryptocurrency, it's high risk, high return, extremely volatile, and Gen Z's favorite, and also the favorite of US president for some reason. But behind this craze is a dark reality. A recent investigation revealed that major crypto exchanges like Binance and OKX have handled billions of dollars linked to scams, drug trafficking, and human trafficking and other crimes between 2024 and 2025. Despite the court supervision and regulations, dirty money continues to flow through the platforms. Investigations reveal that $28 billion of illicit wealth is lying in crypto exchanges. This investigation was carried out by various news outlets, and the investigations were performed through 10 months. Crypto exchanges offer global connectivity and secrecy. You can buy, transfer, and convert crypto without revealing much of your information. As per a New York Times report, Binance has received more than $400 million in deposits from Hueon Group, which is a Cambodian laundering firm, $900 billion from hackers from North Korea. OKX has also received more than $220 million of deposits from the same Cambodian money laundering firm. That's not all. Binance pleaded guilty to money laundering violations in 2023 and agreed to pay $4.3 billion in penalty to US government after processing transactions for terror groups like Hamas and Al-Qaeda. In India, 21 months between January 2024 to September 2025, the Cybercrime Coordination Center flagged at least 27 crypto exchanges for allegedly being used as laundering channels by cyber criminals, scamming $73 million out of more than 2,800 people. And well, crypto exchanges have been targets of the government, but they settle the cases and move on. And for exchanges in the US, it's a safe season. US President Donald Trump has been a supporter of crypto. He wants to make US the world's crypto capital. Crypto companies are declaring themselves safe, and major industries from Wall Street banks to online retailers are experimenting with digital coins. But why is Trump bullish on crypto? Well, shortly before 2024 election, his sons and Trump founded the World Liberty Financial. It is a crypto startup that has seen a huge jump in profits after Trump became the president of United States. His firm is poised to generate tens of millions of dollars in a year from business deal involving Binance that has been allegedly accused of hosting terror groups and illicit businesses on its platform. This has also made law enforcement tough. The Justice Department in April dismantled a crypto enforcement team as well. There is also another theory as to why Trump might be supporting cryptos. A Russian economic advisor started this theory. He suggested that US could someday move federal debt into digital stable coins and later change the value, effectively devaluing debt. Trump has signed various bills to make regulations around crypto, like Genius Act, aiming to create comprehensive regulatory framework for stable coins. The Russian advisor says that the government could someday shift the over $38 trillion national debt into digital stable coins and adjust their value peg. And this is not fictional. US has done it before. In 1934, they raised dollar price of gold, devaluing the dollar, and then in 1971, they abandoned gold standard, making dollar a pure fiat currency. And if it does the same thing again, experts say that it could lead to a financial crisis. If trust in stable coins is lost, then crypto markets could freeze. Stablecoin issuers would sell off large amounts of US treasuries, pushing up yields and shaking bond markets. Banks and payment companies using stablecoin tech could face problems, and this could ripple global credit, stalling trade finance, crashing the emerging markets, and sparking a global recession. Now, this is just a speculation and there is no proof that this is going to happen, but the whole point is that the digital coin world is darker than one can imagine it is, and maybe the world is not ready for the digital coin revolution yet that Trump wants to bring in. What is your thought on this? Let us know in the comments. Nvidia came out with its earnings this week, and it was something that every investor was closely watching. The AI bubble fears had hit the Wall Street, and the tech stocks were in a full sell-off mode, with Nvidia falling over 7% in 5 days before the earnings call. But the AI giant came out with better than expected earnings, even as it failed to give Wall Street a relief from crashing later in the day. At least it managed to keep it in green for a short period. What was said on the earnings call? Here's a report.
Nvidia just delivered the kind of earnings that make AI bubble talk sound premature, but not entirely disappear. In its latest quarter, the company reported record revenue of about $57 billion, up 62% year-on-year, with its data center business alone contributing roughly $51.2 billion as cloud giants kept racing to buy its AI chips. For the current quarter, Nvidia is forecasting around $65 billion in sales, plus or minus 2%, well ahead of analyst expectations and paired with a fat-adjusted gross margin guide of about 75%, signaling it expects demand and pricing power to stay very strong. On the earnings call, CEO Jensen Huang directly tackled the AI bubble question, insisting that from Nvidia's vantage point, something very different is happening. He argued that companies worldwide are shifting from traditional CPU-based computing to accelerated computing and AI, and that Nvidia is in every cloud, from hyperscale data centers to on-premise servers, edge devices, robots, and PCs, all built around one architecture that developers already know how to use. Huang also reiterated that Nvidia has around $500 billion worth of bookings for its advanced chips through 2026, framing the current surge not as speculative froth, but as the early innings of a long-term infrastructure build-out. The immediate market reaction was euphoric. Nvidia's stock jumped about 5% in extended trading, putting the company on track to add roughly $220 billion in market value in a single move, and reversing some of the nearly 8% decline it had suffered earlier in November on bubble worries, after a 1,200% surge over 3 years. The strong numbers and bullish outlook spilled over to peers too. However, those AI bubble jitters existed for a reason. Nvidia's valuation has rocketed as its chips became the must-have ingredient for generative AI, while cloud titans such as Microsoft and Amazon poured tens of billions into data center build-outs and extended the depreciable life of AI hardware, prompting fears that profits were being flattered by accounting and that chip orders were running ahead of what end users could actually absorb. Investors also worried about a circular AI economy, Nvidia investing heavily in AI startups like OpenAI and other firms that in turn become some of its biggest chip customers, as well as the growing concentration of Nvidia's own revenue in just a handful of hyperscale buyers. That is why, despite the blowout quarter, analysts warn the calm may be temporary. Some on Wall Street still question whether AI infrastructure spending can grow at this pace for years without a pause, especially given rising physical constraints such as power, land, and grid access that could slow new data center deployments. Nvidia's business is also highly concentrated. 4 customers now account for more than 60% of sales, and it is largely locked out of China by U.S. export curbs, forcing it to chase new growth in regions like the Middle East, even as regulators scrutinize its dominance.
Japan and China. There is a conflict brewing between the two nations. Let's start from the beginning. Japan's first female prime minister took office just recently in October, and then the Chinese president met with her in Seoul. It was all good and well until last week when Sane Takaichi made a statement about the China-Taiwan conflict. Remember, this is the first time a prime minister of Japan has directly addressed this situation in so many words, despite Japan actually being very worried about this conflict. Here's what she said, and I quote from her statement: "If China was to deploy battleships and involve the use of force, I believe it could be deemed as a situation threatening Japan's survival." So what does this mean? With this, she meant if China would deploy battleships to hurt Taiwan, Japan would allow its military to use force. Now, this made China furious. Beijing saw the Taiwan remarks as crossing the red line. The Chinese consul general in Osaka made threatening comments against her, leading to a diplomatic row that neither side has de-escalated despite multiple protests and summons of ambassadors. Economically, Japan is taking a heavy hit too. China has imposed multiple punitive steps, issuing travel advisories that caused massive cancellation of Chinese tourists to Japan, halting seafood imports, citing inspection concerns, suspending Japanese firm releases, and other cultural freezes. The tourism boycott alone risks wiping out about $14 billion annually in Japanese revenue, since Chinese tourists form nearly a quarter of Japan's visitors. Japan's exports, especially seafood and machinery, face uncertainty. With China as Japan's second largest trading partner, the disruptions come at a fragile economic time for Tokyo, which recently reported its first quarterly GDP contraction in over a year. Yet, China itself is also facing risks. The travel ban hurts Chinese tourism-related businesses and damages bilateral trade ecosystems. More broadly, China's coercive tactics risk alienating regional and global partners wary of instability. Experts suggest that China's aggressive economic pressure could backfire by galvanizing Japanese resolve to diversify supply chains and reduce its dependence on China. Taiwan, in turn, has expressed strong solidarity with Japan. Its leaders have symbolically supported Japan's agriculture and seafood amid China's banned imports. Japan is also an ally to the US, and it says it will back Tokyo. The US State Department's deputy spokesperson, Tommy Bigot, also posted on X that US support for Japan was unwavering. Politically, the crisis is strengthening Takaishi's position domestically. Her firm stance resonates with conservatives and centrists alarmed by China's military assertiveness in East Asia. The confrontation reinforces her arguments for boosting defense spending and securing Japan's strategic autonomy. US President Donald Trump hosted the Saudi Crown Prince at the White House this week. The aim was to strengthen ties, and that's what happened. Trump tried to woo the prince with all glitter and shine. He hosted a star-studded dinner for the Crown Prince, with tech billionaires and celebrity sportsmen attending it. Trump said that US would sell F-35 fighter jets to Saudi, and the kingdom would invest $1 trillion in the United States. But reports say that Saudi is facing a budget deficit and is relying on more debt itself. Much of PIF's $1 trillion assets are tied up in illiquid investments and hard-to-value assets. But what does this new US-Saudi deal mean for India? Our next report tells you more.
US President Donald Trump hosted Saudi Crown Prince Mohammed bin Salman at the White House for a high-profile meeting, signaling a renewed and strong alliance between the two nations. This was the first official visit of the Crown Prince to the United States in over 7 years, with both leaders emphasizing their commitment to deepening security and economic ties. The discussions focused on a broad range of issues, including defense cooperation, trade, and investment. One of the major announcements was the United States' willingness to approve the sale of advanced F-35 fighter jets to Saudi Arabia, a move that could substantially alter the military landscape in the Middle East. The two sides pushed defense, civil nuclear cooperation, and big-ticket business deals, including a Saudi plan to scale investments in the U.S. from roughly $600 billion towards $1 trillion. The White House also hosted a lavish dinner to honor the Crown Prince, attended by notable personalities from the worlds of business and sports, from Ronaldo to Elon Musk. The guest list highlighted Saudi Arabia's aspirations to boost its soft power and attract foreign investment through cultural and sporting initiatives. This visit coincided with broader regional strategic moves, including discussions about security, nuclear energy cooperation, and efforts to expand Saudi investments in the United States. It underscores a shift towards a more assertive Saudi foreign policy, with Crown Prince MBS seeking to position his country as a significant regional and global player. However, this renewed partnership has also raised strategic concerns for India. The potential entry of advanced U.S. military platforms into Saudi arsenals, along with closer Saudi ties with Pakistan, presents new security challenges for India. The increasing influence of U.S. and Saudi interests in West Asia may impact regional stability and India's strategic autonomy. India's concerns are rooted in fears that the evolving Middle Eastern landscape could complicate its energy security, influence diplomatic margins, and limit its options amidst competing regional alliances. All in all, the strengthened US-Saudi alliance underscores a new phase of international relations, where economic and strategic interests are intertwined more deeply than ever before.
How many hours should you work in a week? What's an ideal work week? Well, the answer differs from generation to generation. Boomers would say, what is work-life balance? 12 hours a day is something you could do. Millennials would say that work until you finish your work. And Gen Z would say work only as much as you want and maintain a work-life balance. In 2023, Infosys founder Narayana Murthy started this debate by saying Indians should work 70 hours a week so that the economy grows. This time again, he has made such a statement. He said that China's famous 996 schedule should be practiced in India too. Here's what he exactly said. There is a saying in China, 996. You know what that means? 9 a.m. to 9 p.m., 6 days a week, and that is 72-hour week. People should get a life and then worry about work-life balance. The model refers to employees working 9 a.m. to 9 p.m., 6 days a week, a total of 72 hours in a week. Murthy's statement did not sit very well on social media, and again came the strong criticism. Some said people in Europe work 10 to 5 days a week, and they enjoy work-life balance. Some asked the business leader to guide India in the right direction and that this can trigger burnout in young workers. Indians are already ranked second most overworked in the world, with 51% of employed working more than 49 hours a week. ILO recommends 48 hours of work in a week, not more than 8 hours in a day. As per a McKinsey report, the highest workplace exhaustion was reported in India at 62%, and India reported the highest rates of burnout symptoms at 59% in 2023. So how many hours should you actually work? People working 55 or more hours each week, as per WHO, face an estimated 35% high risk of stroke and 17% high risk of dying from a heart disease. In all, 745,000 people died in 2016 from overworking, resulting in stroke and heart disease. Recently, the Japanese Prime Minister was also criticized for her alleged toxic work culture when she decided to have a meeting at 3 a.m. The mission was to prepare for a budget committee hearing. Sanae Takaichi is famous for her work culture. She says that she sleeps for 2 hours or 4 at max. She has asked her party members also to work like a horse. In Japan, there is a word called karoshi that means death by overwork. Japan has been infamous for long working hours, which went so extreme that it started taking lives. It's not just Takaichi or Narayana Murthy. Business leaders across the world, including Elon Musk, who once said that nobody has ever changed the world working 40 hours a week. Jeff Bezos says that he prefers work-life harmony, not balance. Jack Ma says 72-hour work week is a blessing. Indra Nooyi says balance does not exist. While commitment and hard work matters, and these people might look very inspiring, your mental health also matters. And here's a flip side of working long hours. Even these top CEOs have been open about their health impact. Elon Musk has spoken about constant stress and depression. Satya Nadella has shared his journey of a burnout. Indra Nooyi has spoken about the need for self-care. And well, work might not even be needed in the future. Elon Musk said it himself. Listen to this.
If you say, like, in the long term, where will things end up? Long term, I don't know what long term is. Maybe it's 10, 20 years, something like that. For me, that's long term. My prediction is that work will be optional. If you go out long enough, assuming there's a continued improvement in AI and robotics, which this seems likely, the money will stop being relevant at some point in the future.
So you might work long hours now, but you would sacrifice your mental well-being later. The question is it worth it? Remember the song Baby Shark? Yes, it's the same song that every kid and perhaps every adult has listened to at least once. You might deny liking it, but you probably were addicted to it, and so was your child. The viral hit gave the maker of the song a big boost. Its revenue soared, and it is officially now listed on the South Korea Stock Exchange. And the valuation, well, a mind-blowing $400 million. I'm talking about the Pinkfong company. How did it get there? Our next report will tell you more.
In 2016, a tiny Seoul startup uploaded a 90-second kids video and accidentally created a global anthem. The company, then called Smart Study, now Pinkfong, had 3 founders from the tech and gaming world trying to crack children's digital education. But their data told them something simple. The younger the kids and the simpler the content, the better it performed. Their Baby Shark dance took an old camp song and gave it a K-pop makeover. Neon visuals, a tight beat, and hand gestures any toddler could copy. The video spread first through schools and birthday parties in Southeast Asia, then through the hashtag Baby Shark Challenge as parents, teachers, and even celebrities posted their own versions. By 2020, it had become the most watched YouTube video ever, and by 2025, it had crossed 16 billion views and been translated into 25 languages. With the US delivering the most views and Brazil some of the strongest engagement, Pinkfong's real masterstroke was turning one viral hit into a universe. Baby Shark morphed into toys, books, TV shows with Nickelodeon, mobile games, a feature film, live concerts, and endless preschool learning videos, at one point generating about half the company's revenue before settling at roughly a quarter as other series grew. Even then, strict kids ad rules on YouTube meant the most watched video in history brought in far less ad money than an adult hit of the same scale would have, pushing Pinkfong to focus on content sales, licensing, streaming deals, and live experiences instead. More importantly, it proved it wasn't a one-song wonder. New characters like Luke, more Pinkfong Fox content, and especially the family-focused BabyFin franchise took off, with BabyFin now contributing around 40% of revenue and overtaking Baby Shark as the top earner. All of this momentum led to Pinkfong's market debut in November 2025. The company listed on South Korea's Kosdaq, priced at the top of its range, raised a little over $50 million and saw its shares jump more than 9% on day one, valuing the group at roughly $400 million. For founder Kim Min-sok and his family, it was the moment a 90-second shark earworm officially became a global media empire. For the industry, it was proof that in the algorithm age, one perfectly tuned children's song can be the launchpad for a billion-view brand.
For more such news and news, keep watching ET Now, and I will see you in the next week.
If you like this video, then like, share and subscribe to ET Now.